Hey guys, welcome back. Let's have a look. Before we start, let's just make sure that everybody's aware this is not financial advice and this is just me just going to guide for a short while what I'm seeing. Today it's Friday, so we must keep that in mind. I just want to see. Hey guys, welcome back. Let's have a look. Before we start, let's just make sure that everybody's aware. Righty. Okay, let's run through this quite quickly. I've got a 4-hour chart open here. Okay, so what do I see? Let's just make it nice and big so everybody can see it. Let's just see. Wait. So this week started around here, Friday, Sunday, Monday. So we can see this whole week's been an up week. So we expect maybe a pullback, can run higher, but normally it goes up. If it's been moving in one direction, it normally comes and consolidate into Friday, but we can see a continuation as well. All right. Let's see, what do I see? All right, first things first, where are we trading from? This is obviously a 4-hour, and we see have this H4 fair value gap. All right, as long as we stay above the bottom side of this or inside, we're still bullish, or I'm at least still bullish. The minute we get a crash down close below it, I'm expecting lower prices, and yeah, but for now this is what I see. Then the second thing that I see fairly equal lows. Call it equal lows. And that's normally where we find liquidity. So in this case, we could see some sort of run down or run up and then run down and then just consolidate for the rest of the weekend. All right, 1 hour. So that's the 4-hour. See why this takes a bit slow. Not sure why. Okay, connection checked. Right, so we're going to leave that red because that is the 4-hour. Then we've got this fair value gap. Yeah, and we call this the H1 fair value gap. And I think what I'll do with this one, we'll leave it red because those are the higher time frame fair value gaps. So in this particular thing, look, I'm not going to predict where market's going, so I think what we need to do, we just need to know where's what. I mean, there's equal type of highs up there, maybe worth marking them out. Let's call it equal highs, equal highs. All right, so we've got a fair value gap in the middle. I've got a bigger one here, and then we've got liquidity there and liquidity there. So we're either going to see some sort of reversal in here to go there, or we're going to see a drop down, or we're going to see consolidation. Alright, now I'm gonna go down to a 5 minute, and this is where I normally gonna look for what I want to trade. Let's just see, so that's equal highs there. Okay, so let me just quickly, while we wait, let's see what type of setup am I looking for. Alright, so I'm either looking for something that's going to run a different liquidity, create a fair value gap, and the fair value gap is basically, like in this case, over here. You'll see this big white up candle. The high of the previous candle did not fill up this candle, and the low of the third candle did not go into, so that's a gap, and that's a fair value gap. So you can see price goes in, respect it, but then it breaks below it, touch it again, and then drop. There's a bigger fair value gap here, so we need to see how it respects this, or what does it do. Does it crash through it? Does it invalidate it, or does it respect it to go lower? So the entry model that I normally look for is, let me see if I can see, yes, this is a good example. So, and this is also a good example to explain to you guys why I would not take this one. So here we can see market has come down and forms sort of equal lows here. Liquidity runs up, black candle, and then this black candle. So there's two, because we're looking for swing points. The swing point is two candles. One candle in the middle is higher than the two candles on the side. That's a swing point. Only three candles. So in this case, I was looking for three black candles, down candles, and in this middle, the second one here, or the third one here, I'm only looking at these last two that runs and take liquidity out. Once it does that, I want to see the third candle being a white candle taking out the high of the the open of the middle candle. It does this, it came back and it ran up to these highs. Why did I not take this trade? Because we've got liquidity just below it. I need something to take a large large liquidity. I mean, you could have taken this trade if you really wanted, because you would have taken it there and it would have given you, and you would have targeted this high. That's a 1-to-1 and it would have played out. But I'm not going to look for a 1-to-1. I'm going to look for something. We'll see now. Let's see where we see liquidity. There is liquidity. There's a swing high into this little fair value gap. But I'm not gonna, I mean, you'll see there's a fair value gap. We pinned in it and we went down. This thing can go. So my main target's going to be this middle 50%. 50% is that dotted line of this big fair value gap. If it holds price there, or use this as a order block, we'll see. I'm just talking about the stuff that I'm seeing right now, and I'm not too concerned because we haven't taken a trade, and those are just scenarios that I'm seeing up front. It's not to say it's going to play to those scenarios. And okay, so we'll just have to wait. We've got 4 minutes, then the market's going to open, and then we'll see what I want to see. So we're at the bottom, we're there. I just want to see where the opening gap is for today. So this is quite interesting. So let me show you guys this. So we all know, I'm just going to draw a line here so you guys can see what I'm seeing. So we trading about by that black line. If you go into regular trading hours, it's going to remove everything that happened from the close of last night to where it is. So price is currently down here. We expect, I mean, if you look at yesterday, there was this big gap that generated here. I'll make a separate video for this. But when the market opened, it came and it filled that whole gap before it did what it did. So I'm expecting, and you'll see this happens most of the time. Not every time, but most of the time if you go back. And this is just a way to see where the market most likely tend to go. So I'm most probably, I've got this blue line up here, but maybe it's this black line. So it's, I mean, this whole fair value gap can get filled in the open from now in next 3 minutes. Well, it's not going to happen in 1 minute, but it could have started, could consolidate, it could run down to run these equal lows, and then makes its way up to clear this or to fill this whole pink gap up here, which is a fair value gap, and it's now opening gap. So that tells you there's a big imbalance here that needs to get filled. So my guess is between 9:30 and 11 we'll see price fill this gap at least, or break through and run. But we need to look for some sort of narrative. I would like to take that trade in it, but I would not just take it. I would like to see price goes down, take these lows out, which was these equal lows. Let's maybe bring it up so it's exact. All right, that's the equal lows I'm talking about. And let's see. And then we've got a much bigger fair value gap lower down there. All right, let's see what happens. Alright, looks like it wants to, I don't know, go up there, maybe give us a setup up there and then come down. Let's see what it does. We might see some aggressive movement now in 1 minute. Okay, let's just wait and see. Okay, it's that time. Let's see what happens. Let's see what it does. I mean, this could have been an entry right there. Came down nicely in that area to take it up to that. See how that 0.5 is lining up with that order block there. That's perfect. And if you've taken the trade down here, you would have put your stop down here. This is a simple way of trading, and it's very simple, very easy. But I have not taken this because I want to see what's going to happen. And the reason I'm using this swing, let's just take this off. This swing point here, it's 3 candles again. That's the last swing point before we get this big push up to break the structure here. Then come back down into a discount area to go up there. So let's mark it out if everybody wants to learn, but let's see what happens here. See, it hasn't gone to the 50% yet. Let's do this quick. Last. Right, so anything below this 50% here, I'll make that green. That's all discount. That's where you would look to buy. And the reason you would buy there is because we have this high here that was broken by this aggressive. It closed above it. That's a break in structure right there. and therefore we would like to see some sort of pullback, and I'm taking the highest point. I mean, even if you went down there, you just got in, but it gave you multiple options to enter right down. And then that 0.27, that's your first target, and that would normally get you, I think it's a 15 to 10, yeah, 1.57, but if you take it all the way to the top, it will give you your 2 to 1. Okay, so let's take all of that off, so what I want you to look at is this fair value gap here. See our price was jigging in there, and now it's going to create a big outside candle. Let's see if there's anything on the 1 minute. Right, nothing here yet. I mean, this is a nice fair value gap here. There was one here, so I would have loved to see a swing point. This white candle, black candle, that's not what we're after. That's not the right thing. Let's see if there's any. There's nothing here, so we'll just have to wait. Remember, we could reject up here. Fair value gap, it's holding price, push it up. If it creates a fair value gap up here and it closed below it, that's an inverted fair value gap, and that is a good sign to then see full shorts. And the reason I would be inclined to do it, because we're still within the bigger fair value gap, and it's rejecting at an order block type of thing. Right, let's see how it plays out. All we gotta do is wait. Show you something, you guys. Equal lows. I'll tell you something about this. Equal lows, that's liquidity. And this is perfect when it forms within another fair value gap. Just call these fair value gaps. We all know. Now I've put a lot of stuff on here now. Fair value gaps. Okay, so I would like to see a white candle spike through it, but stay a white candle, not a black candle. It's got to be a white candle like this, white, 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 and then when the rejection comes, that should be a black candle, but it can't be a black candle forming there, because then I wouldn't take it. People would think, why would you not take it if you got the bias for down here? Well, that's not my rules. My rules is very clear, and unfortunately I've got to stick to those rules based on my testing and experience. Those are the type of rules that has the highest probability to succeed. So let's just see what it does. I mean, we've still got time. And the macro is normally from the first 10 minutes or the last 10 minutes of the hour, and the next, or in the first 10 minutes of the hour. So in this case, it's going to be 9:50 to 10 past 10. But let's keep an eye. Okay, so here we go. Let's see what it does. So it rejects now and stay white, and the next one's a black candle close below that open, I'll most probably just take it. But there's no fair value gap, so you can see all these candles gets balanced because it spiked right into the next high. It would have been nice to see some sort of gap that's left open here, but maybe this is the gap. But let's see, because if this is the gap and it stays like that, and the next black candle inverts, see, I don't want to see a black candle here, I want to see a white candle. As you can see, it closed the candle completely, so who knows. This is where people think they're missing out. When they see that spike and that rejection, then they sell it here, put a stop there, and this thing could quite easily go that way, that direction. Might be wrong, but there's no fair value gap. Yeah, maybe on a 30 seconds, which I'm not trading. But this was a target for us to sell from. And that's the top side of the fair value gap. So let's see if maybe that's a liquidity to go lower and everybody sell here, and then come stop everybody out. So let's mark it out to see what, if that's a liquidity pool they want to run before they want to reject it. But then I need to get a nice gap forming as well. I mean, in this case, if this thing closes above here, I mean, you could be an aggressive because that's a perfect swing, but it's not in the right context because we're expecting to sell from here. Why would you buy it? But if it closes above that line like that, you could buy there to take those highs. So let's just okay, well, it's a close above. No, it's not a close, so it's not a valid swing for me. So I will just take that off because it's not. It's got 7 minutes to set it up in order for the macro to run. The macro normally runs to liquidity. Doesn't have to start that very minute. It's got 20 minutes. The right swing point that I'm looking for. Again, this is a swing. If it closes above that, I'm not taking it, because that middle candle, that black candle, should be the swing point. If this candle closes black and then go white, that's fine. But let's see, maybe we get a nice gap and a setup up here. Okay, let's see what it does. Hopefully it leaves this gap open, because then we've got a nice gap to work from, to go lower. Okay, let's see if this is what it's going to give us. That's a fair value gap. Now I want to see a white candle spike through it and stay there, and then the next candle close like that. But now I need a black candle to come down and close down there. And like I said, we're filling this whole pink block, and let me show you guys what it looks like. Remember, what's happening here? Remember I talked about this big gap? Yeah, opened, it filled the whole gap. Takes forever. About that. Righty, so let's see. Okay, obviously it wants to run higher. And maybe it's just going to run higher in order to run lower, maybe in a PM session. That's all I can think. My cutoff is here. Boom. It's 11 o'clock. 10 to 11 is my optimal time that I'm trading AM. But let's see if it's going to give us some sort of entry. Just going to extend this fair value gap with this equal lows, because they're very much in play. And Just minimize this. I want to see. So there's liquidity here. Go down to 5 minutes quick. Because I think there's still liquidity that's sitting there. Sorry guys, I don't know what to do anything. Alright, so let's look at this. So yesterday I wanted to trade these. I'm not a trend line trader, guys. I'm using it to get my liquidity. Which is these highs here, which is this trend line down here. And that normally you'll see we've taken that. I've marked out that one, and the ultimate one is up there. So that's a very possible liquidity pool. We just missed it. Nice there. So we're very possible that we're going to go there. So I'm going to take this off here, and then we've got these equal lows here. So we've got these equal highs here with this liquidity. That liquidity was taken. This thing can go higher. I mean, if it does, then so be it. Then I'm just not going to trade anything, because we are in a bullish market. There's no reason to be, you know, trying to go short. Although we've got these equal lows here, we'll have to wait for the market to take a liquidity. We thought there was liquidity in here, it ran through it, so obviously it wants something else, which is up here. So I'm going to leave it at the 5 minute mark for now. Now we just have to sit and wait. That's all. And that is where most traders get burned, because some traders might think, no, I'm not waiting, I'm jumping in. Yes, that's a gamble, because this thing can go up and you'll make money, but you've entered like in the middle of nowhere. Or this thing can reverse right here, like it did here. It went up, reversed, aggressively pushed up. What did it do? It switched gears right before that liquidity, and then drop the whole, you know, the whole London session. Where most people thought, okay, we're going up there and then down, and then people try to, you know, try to scalp it for something that looks like a sure thing. Liquidity here, we did not buy here. As I mean, if you look at it now, it would have been a nice trade, but we couldn't, because we haven't tapped into that equal lows that formed. So you've got to wait for that to happen. We've got equal lows here, so there's liquidity down here, and I don't know if we're going to see it today, because it's Friday. It might go up and PM session drive it all the way down, or just go up and consolidate, or just run for the next moon. So we'll have to see. So let's just wait. So if we don't get a setup or trade, obviously this blue line is my cutoff, then I don't see the point for me to sit around. If it plays out after that, I mean, so be it. I might come back later in the PM session to see if there's anything to trade. Otherwise, yeah, I'll literally just leave it till next week. I mean, we in the exact what you call it, the macro time, and this is what's the key, 10 10 10. Let's see what happens here. Maybe there's a setup here for reversal. I mean, while we wait for that, I want to show you guys, I mean, this is also trade from liquidity to liquidity. Being high, you could have entered there to take it all the way out. So that played out nicely. I had something else in mind, and it's outside my time, so I had to wait. So, I mean, I'm not sad that I missed that trade, those trades. You're always going to get it, and you're always going to find it. But in this case, I've got liquidity pools that I think we need to go to. Whether we're going to go there today, I don't know. And again, if you want to, I mean, there's lots here. There's lots here. So if you connect all these, I mean, that looks like a trend line type of thing, but that's all liquidity, liquidity, liquidity. And yeah, that's where price will get drawn into, maybe on a later stage, maybe not today. So let's see. So it's quite interesting now. We see all these candles, wick up, next candle went up, wick down, covered that whole candle. There's no gaps, no gaps. This came down, either supported, it's either become a support level or a resistance breakthrough invert. The swing point strategy. It's very simple, it's not complicated at all. And I promise you it will improve your trading, whether you've been trading for a while. If you're new to trading, it's easy to understand. So I'll try to be as, keep it as simple as possible. And then you'll see how that, that keeps you out of trades. That's who I need to buy or sell, whichever way. And then if you look at it after the fact, then you'll see. If you just follow the rules on it, you would not have entered those trades. It's a high probability setup, and it works very well for me. So in this case, we've got 1, 2 white candles. If this is a black candle that's going to close here, there's a very good likelihood, if it closes below the open, for us to invert this. If we invert this, then it's a very likelihood to go here and then maybe lower. But we need to understand now, what is it rejecting here? Because we still got this liquidity up here, and that's the thing. this one here. We can go to a 1 minute and see what it does. See, the 1 minute has given a nice entry. You've taken this out, and you would never short sell down there. You would take your FERB and you would wait for price to go all the way up here, retest that, and then go down. The only thing I'm worried about is up here, and I don't know if that is something for us to take today. It might leave it till next week, so maybe there's an opportunity to sell. So what I'm going to do is I'm going to take a small trade and see if we're going to be successful on it. Of course, the rules are there, so I'm going to just take a short there. Okay, very important, we've got a stop loss up there, and then we are gonna set a take profit down here to give us $1,500. This fair value gap is all in price. That's why we've got stop losses. I mean, if this thing runs through, it stops me out, that's fine. But if we were right, there's a break of structure here. I'll call it a break of structure. Break of structure. Guys, remember, it's one white candle, two white candle. This candle here took out this high. The next candle did not go close below it, but it smacks right through that break of structure. We wait for the retest. We sold at the retest. Now we're targeting equal lows. We've got this big fair value gap in our in our face. Can stop price, but we will most likely bring the, if we close below strongly, I'll go to break even and hold for $100. This is also the ICT silver bullet trade. It's in the, after 10 it happens. My only concern is this fair value gap, this green block, but we've rejected I have no idea what just happened. Sorry guys, I've got no idea why this connection is so bad. But anyways, we gotta smash through this green block here in order to go lower. If it resists here and it runs up and goes up there, then obviously not a good, then it most likely want to go up here. Okay, so the connection is, or something's up with this. Okay, guys, I'm going to pause for a minute here and then I'll be back in a second. Let's do this. Let's do this. Let's do this. let's do video. Give me a second, guys.